Hi and welcome back to Investing 4.0 Visionary Investing in Future Trends. A few videos ago, I explained why having an investment strategy is so important, and today I will share my investment strategy and give you a glimpse into my portfolio and also state the reasons why I chose this strategy and what I want to achieve with it. But before we start, as always, this is no investing advice. You should always do your own research and only invest into assets that you understand and where you're willing to take some risk. But yeah, that's it for now. Let's begin. Alright, I had my first experiences with the stock market when I was about 12 years old, and you can also get some more information in the strategy video. And yeah, I had some money from celebration and my dad asked me if I wanted to invest, and yeah, we sat down, and since we covered that in school, I decided to mainly invest into China and India as I knew that those countries were growing significantly. Then when I was 18 years old and I was ready to get my driver's license, I actually closed that account and basically used it to again pay my driver's license and had some money saved for studying as well. What was important and I remember still today is that the day I closed my account, the lady from the bank actually asked if she can recommend the strategy to other customers because my account made a whopping 16% per year, and yeah, that was mainly due to China. After this, however, I just invested into single stocks, General MSCI World ETF, and some other random assets, and had no clear strategy and focus. And yeah, to be frank, I wasn't really sure what I was doing. I just wanted to be in the market with a little bit of money. Back then in 2017, it changed and I started to gain more interest and began to read a lot of books and watch a lot of YouTube videos like you are doing right now about personal finances and investing. And for the first time, I also came across the FIRE movement. Now, the FIRE stands for Financial Independent, Retire Early. In my world, this sounded too good to be true, but it didn't matter if it was realistic or not. It was just about the experiment for me, and we'll see if it will be realistic, so I'm trying to get there. So in early 2019, after tons of research, I finally defined my investment strategy. And the goal of my strategy is to get about 10% returns per year, and thus consistently, and that's the goal and very ambitious goal, to beat the historic market average with about 7% growth per year. As I already have some experience with the stock market, I think that I understand what it really needs to be successful. And the first thing is a good and consistent strategy, then patience, and yeah, as I mentioned, consistency is key, and an ear to the market in some situations as well. So I started my project in early 2019, and yes, if I would have known that 1 year later there would be a global pandemic with a virus that no one knows or no one knew back then would have happened, then I would have waited and would have ended the market 1 year later because it would have been the perfect entry point. But yeah, obviously I didn't have a magic crystal ball, nobody had, so I invested a big chunk of my money back then. Anyways, I'm not jealous if you found the right spot and had more money available to put on the market basically at the beginning of this year. But anyways, it doesn't matter for now. Now, the first thing when defining your strategy is actually to define what you want to accomplish. And in my case, I recently started to work and my expenses were quite low. So knowing that I might one day want to live in a bigger apartment or even have a house and have some kids, like a family, and that therefore my natural expenditures would inflate, I multiplied the amount by 2 and ended at about 1,500 euros per month, or that is about $1,800 per month as the money that I need to be financially independent and free. And that means that I can cover all of my basic house or rent, food, car, and other things like clothes and something, and maybe one holiday per year with this amount per month. So considering the 4% rule, and that's the basic rule of the FIRE movement, that basically defines that due to the historic market growth, one can withdraw 4% of the portfolio and still keep it growing in order to respond to inflation. And this 4% rule, now with the calculated expenses, create the goal for me of reaching 450,000 euros. And if I grow my portfolio to this amount, 450,000 euros, I can withdraw exactly 1,500 euros per month without diminishing my portfolio value and thus become financially independent. So this is my overall goal. And then I just had to basically come up with a strategy. However, a quick disclaimer here, this does not consider taxes, so the amount would be slightly lower, so the monthly amount would be lower, but hey, I think as a first goal and for a general strategy, it doesn't matter if it's 20K more that you need or if it's a bit more or less, it doesn't matter. The general direction and the vision matters here for me. Now, considering my net value and my goal, I'll calculate it that I need to invest about 60% of my net value right now, and then for the next 10 years, about 700 euros per month. And that would, again, bring me to financial independence in about 10.5 years. Now, currently I can invest way more, but as I consider buying a house or an apartment right now, I also want to hold some cash. And investing those 700 euros per month seems a lot, and I can currently afford it. And I'm actually, as I mentioned, investing way more right now. So I calculated in that when having kids or maybe buying a house or an apartment, this might drop a little bit, and 700 euros still seems realistic to me. But you for yourself gotta define your own personal number of what you feel comfortable without stretching too much. But now I know you've been waiting for it. Let's finally have a look at my investment strategy and also my investment portfolio. Now, you might already know that my investment strategy is consisting of 2 investment portfolios. The first one is a long-term ETF world portfolio, and the second one is a single stock and trend ETF growth portfolio. I currently have about 65% of my investments in the world portfolio and about 35% in the single stock and trend ETF portfolio. For the world portfolio, I did a lot of research and wanted to really base it on scientific data that are reliable. And those scientific data show that depending on your investment amount and the level of complexity you want to handle, you have different options that are available. And just to give you a simple overview here, the simplest version is basically to invest in one ETF, and that's the MSCI World ETF, and you're all set. And that's recommended if you have not a lot of money and you want to have no research and low fees, just one ETF. The second version already consists of 2 ETF, and that's MSCI World and the MSCI Emerging Markets ETF. I, however, had some money available, and I decided to go with one of the professional versions, and that's the first professional version. I think there's 2, and I'm gonna explain them to you in a second. And those professional versions actually allow you to define your own weighting of the different regions and countries. And just in comparison for this, and why you might want to consider that, is that, for example, the MSCI World is focusing mainly on the US. I think 60 or 70% are focused on the US. And if you want to put in your focus on like some other regions, then you need to have at least a second ETF or choose a different option. So I'm going to show you my world portfolio and the weighting that I chose for the different regions here right now. And basically this portfolio is split into 3 main areas. And the first one is developed markets, emerging markets, and then global real estate. And we have a split of 65% focus on developed market, then 25% on emerging markets, and 10% on global real estate. Now, these developed markets and the developed markets is split into large and mid caps, and then also small caps with 50-50. So 50% of those 65% large caps and 50% of the 65% into small caps. And within those 2 different categories, we basically have a distribution of 40% focus on USA and North America, 44% focus on Western Europe, and 16% focus on Japan and or Australia. Same for the small caps here. Then, as mentioned, we have 25% on the emerging markets and 10% in global real estate. As mentioned, there is one additional professional version, and that actually includes raw materials and commodities as well, and has a slightly different weighting therefore, because it's one more category. But I decided to leave them out as they are not running very good, and it's expected to run also not good in the future. So I just left them out. The goal of this portfolio is to achieve a consistent growth of 7% per year. And since I ran my portfolio, which is about 1.5 years ago again, I achieved almost 12% growth per year. And I'm currently up, I think 17-18%. So these are actually the ETFs that I chose. And the first one is the iShares Core S&P 500. Then we have the Xtrackers Eurostoxx 50 and the iShares Dow Jones Asia Pacific 50. Those are the large caps. Then for the small caps, I have the iShares MSCI USA Small Cap, the Xtrackers MSCI Europe Small Cap, and the iShares MSCI Japan Small Cap. Then for the emerging markets, I chose the Amundi MSCI Emerging Markets ETF. And for the real estate, I chose the Spider Dow Jones Global Real Estate. You can also invest into single companies, but I still chose an ETF because it's more diversified. Now, my second portfolio, the single stock and trend ETF portfolio, has the goal to achieve about 15% growth per year. And with the distribution of 65% on the global market and 35% on the growth stocks and trend ETFs, I would achieve an average of 10% growth per year. Now, let's take a look at my single stock and trend ETF portfolio. If you like this video so far, please help me to beat the YouTube algorithm by liking this video. And by the way, if you're not subscribed yet, my good friend Elon Musk will basically shoot you into space. So really smash that subscribe button right now. All right. So I'm investing only into stocks and ETFs that I believe to outperform the market significantly in the second portfolio. And for this, I selected the following general categories that I want to invest in, and I will only invest into companies that I analyzed before, and I got a fresh update here for you. So the categories are automation and robotics and 5G, then AI, big data and IT, clean energy, data security, e-commerce, gaming, and general new technologies. And I also added a category that is turnaround candidates specifically after the COVID pandemic here, because there's still a lot of say companies and industries like the whole travel industry that I believe to turn around within the next 2 or 3 years. Now, before I show you my positions here, a quick disclaimer. As I moved back to Germany after living in the US for 3 years, and the broker I had back then was quite expensive. For one transaction, I paid 10 euros, and now with my new broker, I pay 1 euro. I waited until I could register for a better broker, and I'm holding the ETFs and stocks as of April this year. So the performance that you see is basically as of April or even newer. So here are my current positions, and sorry it's a long list. You can also find it down in the description of this video, so feel free to skip this part if you don't want to listen to me reading it out loud. The first one is Appen, the first company that I analyzed here on this channel, and I currently hold 95% shares, and it's down -5%. I'm not too worried by it. I think the market has not fully grasped the potential of Appen, and I'm going to wait because I believe in the long-term success of this company. Then I have a few ETFs here. The first one is the iShares Automation and Robotics ETF. I currently own 261 shares, and it's up 31%. Then I have the iShares Digital Security ETF. I currently own 392 shares, and it's up 13%. And I believe that this will really grow within the next 10 years. Then my biggest position is NIO, electric vehicle company from China, a startup basically. I currently own 261 shares, and it's up 221%. Then I have another ETF for AI and big data, and that's the Xtrackers AI and big data ETF. And I currently own 36 shares. And I mentioned in another video that I will exchange this one with the Wisdom Tree AI and big data ETF. Then I think the last ETF in line here is the Lyxor MSCI World Information Technology, so a basic IT ETF. And I currently own 10 shares, and it's up 40%. Alibaba, the one that we just covered in the last videos, I just bought it, 23 shares, I think about a month ago. This basically is, it's a little bit volatile, -1%. Again, I'm holding long-term, not too worried about this. Tencent, similar, just recently bought about a month ago, 60 shares plus 3%. SAP, very similar. I used the dip. They were beaten by the market, in my opinion. The value of the company is still high, and the reaction from the market is not what my assessment of the company is. So I decided to invest now with the dip, bought 28 shares and -1% currently. Then the Nasdaq US Biotech ETF, again, a long-term position that I'm holding here, 400 shares plus 7%. Accor is a hotel chain company and is a turnaround candidate for me. So I'm probably selling it when I'm between 50 and 80% plus here. I expect that to basically be in this range in the next year or two. Currently own 42 shares, up 24%. Ballard Power, a clean energy sector, 75 shares plus 25%. And then, little disclaimer, I did not listen to my own analysis back then. and still decided to invest into Baidu. Not a whole lot, just 10 shares, but I'm currently down 8%. And yeah, I wasn't too confident into them back then. I know that there's high volatility right now. I'm gonna wait until they hopefully turn around and grow a bit more. But again, I'm not too confident. It was just an experiment from my side to be invested. And yeah, it will not happen again. I always listen to my own analysis. Next one in line is Palantir Technologies. Big surprise from my side. I know it was discussed very controversial in the media at the beginning of this year with the IPO, and I currently own 55 shares and I'm up 116%. And I currently on this stock, I have a stop loss limit at, I think in the end then 100%. So if it drops another 16%, then I will sell it automatically. Next one in line, Nvidia, 2 shares, -1%, holding long term. Let's see what happens here. Alliance or Allianz, turnaround candidate from my side here as well, 4 shares +15%. Then JD.com, that's a company that we are probably going to analyze in the future as well. I currently own 10 shares and +6%. Salesforce, 3 shares +25%. And Medallia, a very interesting company in my opinion. I own 20 shares +20%. And then last in line, another turnaround candidate, Delta Airlines, 15 shares +27%. Now you notice that I have a big mix, some ETFs, some single stocks, and you also saw a few turnaround candidates in here. So I will get rid of those turnaround candidates and reinvest the money into other growth companies once they actually turn around, and I'm probably going to sell them with a plus between 50 and even maybe 100%. So depending on how long I will wait and how long we take to really overcome the corona pandemic. Looking at all those positions, my average performance since April is at about 21%, and that's mainly because luckily the biggest positions that I'm holding are the ones that are up significantly. I also cashed out some positions that I held earlier this year and reinvested them, so I already made about 2,000 to 3,000 euros this year, and that's not shown in here, but it's reinvested. Now, as Baidu shows, and as I explained to you, analyzing companies and their performance is crucial, and yes, I will listen to my own analysis in the future. Discipline matters, and I should be a role model, especially when I share this with you on YouTube. It was just a fun experiment from my side, and currently it's not looking so good. Let's wait and see how they perform. So so far everything is looking good and way better than I expected. Having good years in the beginning is definitely a good lever for the future, and I might achieve my target even a little earlier, or maybe a few years earlier than I expected, especially if the next years look similar. And I believe that the stock market will actually go more when the pandemic is over. So now it's up to you to actually roast my strategy and roast my depot and my portfolio down in the comments below. I'm curious on your opinion. There's probably some things that I can really optimize. And let's see what your opinion is. I, for myself, as mentioned, am very happy with the developments and will continue to give my best to keep the portfolio growth in the double digits. And that means I'll analyze new interesting companies and ETFs and consistently also give you updates about my investments. Well, I hope you appreciated the transparency about my investment portfolio. And if you like this video, I would appreciate a thumbs up and subscribe to my channel. Again, Elon Musk doesn't like to see if you're not subscribed. So if you don't want to miss any future content, hit the subscribe button and click on the little bell icon. That's it for now from my side. I'm out.